Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 2nd of February 2022, and we're producing our regular morning update or daily update, providing prices, news, and economic data. Today we see gold and silver prices mixed ahead of the ADP Employment Report due out in a few hours' time, and also while the world awaits what is happening geopolitically. There may also be some good news regarding interest rates too. So let's take a look. Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 2nd of February 2022, and it's 9:07 in the morning. We did say in our video published yesterday afternoon that we would be publishing most of our videos in the afternoon. But we've had a last-minute appointment scheduled for today, so we're producing this one in the morning, as we have done in previous weeks. The news today is somewhat mixed, a little optimism and a little pessimism. We can see that on the headline for Bloomberg, a journey across Ukraine shows invasion would come at a price. But the good news, allegedly, is that Putin suggests that talks could help diffuse tensions. A little bit of negativity news, or negative news, OPEC Plus seen sticking to policy despite oil price rally, where despite pressure on OPEC Plus, although they're increasing output, it's not going to be enough to meet demand. But then on the positive or potentially positive front, the Fed won't be rushed in its hiking path by Wall Street frenzy, basically highlighting that the Federal Reserve is saying, hang on, don't think we're going to raise rates as high or as quickly necessarily as some pundits are predicting. Let's take a quick look at oil. Published yesterday, but it takes effect today, OPEC Plus will likely stick to existing policies of moderate output increases on Wednesday. 5 sources from the producers group said, even as it expects demand to rise to new peaks this year, and as oil prices trade near their highest since 2014. The group, which comprises of the Organization of the Petroleum Exporting Countries, OPEC, and allies led by Russia, therefore the Plus, and produces over 40% of global supply, has faced pressure from top consumers such as the United States and India to pump more to help the economic recovery from the pandemic. But OPEC Plus has refused to adhere to speedier increases, arguing that the world is facing an energy shortage due to poorly calculated energy transitions to greener fuels by consuming nations. Several OPEC members have struggled to pump even in line with their quotas due to underinvestments of the past few years. And this potentially is the danger of the mad rush to save the environment, to save the future of the world due to carbon dioxide emissions. One of the prices it is paying is miscalculating our existing energy needs. Fed won't be rushed. Federal Reserve's officials have a message for investors ramping up 2022 interest rate expectations. Not so fast. None of 6 Fed officials speaking so far this week have backed the idea of a half-point increase in March. And the most aggressive, James Bullion, president of the St. Louis Fed, said 5 hikes, one more than every quarter, is not too bad a bet. Ideally, the Fed prefers to go gradually, said Kansas City Fed Chief Esther George, who's another hawk. The measured calls contrast to Wall Street's forecasts for as many as 7 2022 hikes or even a half-point adjustment. My word. With inflation near a 40-year high, Chair Jerome Powell last week said the FOMC had penciled in a rate hike for its March 15-16 policy meeting. He declined to take a half-point move off the table or outline the pace of further increases, leaving the door open to moving quickly if needed. But the officials speaking on behalf of themselves have since made clear that their strong preference was not to move with too much haste. It looks like we are going to have an increase in March, short of a major disaster in terms of economic recovery, or a sudden plunge in inflation, which none of us are going to see, let's be quite honest about it. But perhaps it will only be 0.25%. Now this has had an implication for the dollar because the dollar index has fallen. It was well over 97. It dipped a little yesterday and it's dipping again a little today. We still think it's going to be the strongest of the major currencies and therefore expect a dollar index of 95 and above, but it's currently above 96 at 96.16. BBC Business News, bad news for shoppers. Shop price rises nearly double in January. The price of food, furniture and flooring all jumped in January, says Trade Group. Amazon announces 1,500 new apprenticeships for 2022. Of course, we all know, those of us who've dealt with Amazon, their service is impeccable. I've ordered goods in the morning and had them delivered in the afternoon. That said, they are taking trade away from traditional high streets, which has been really the death knell of high streets for a number of years. US and Canada, BBC News, tensions rise over unlawful trucker blockade. The anti-vaccine mandate Freedom Convoy protests has spread to the United States-Canadian border. And Whoopi Goldberg suspended over Holocaust remarks. We've already highlighted the dollar is down slightly. Energy prices nudging up. Brent crude yesterday fell below the $90 level, edging back up again today. And we've noticed that there's been, actually quite interestingly, the difference between WTI crude and Brent crude, for the moment at least, has narrowed. If we take a look at the price of gold now, we can see that gold is just hovering above $1,800, though it did fall to $1,794 earlier today, and it's down just under $5 on the day. And silver prices up 5 cents at $22.79, been as high as $23.05, but also as low as $22.53. So quite a reasonable spread there of almost 50 cents. Cryptocurrency market is up 0.5%, with a market capitalization of $1.77 trillion. And we can see that Bitcoin is marginally up at around $38,500. Now, finally, economic news. What's interesting is we saw yesterday the manufacturing indices coming out from market and ISM, both higher than expectations, though not considerably so, but higher nevertheless. And job openings were also higher, not only of expectations, but what they were the previous month. And these are the figures for December as far as job openings are concerned, and January for the manufacturing indices. Now today we have the ADP Employment Report, which is an important report, but the most important data coming out will be tomorrow, and then culminating in the non-farm payrolls on Friday. So tomorrow we have the traditional jobless claims, but we also have services PMIs and factory orders. That's it for now. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Until tomorrow, have a great day. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.